What's up, everyone? It's Kadi with Money Investing. In this video, we are going to be talking about Google, ticker symbol GOOG, and they are reporting earnings on Tuesday. That is going to be April 24th when they are reporting for their first quarter fiscal year 2023. That's actually going to be April 25th, Tuesday. So in this video, my goal is to go over everything they are expected to report. And of course, the intrinsic value calculator is going to be used. So we're going to calculate what the fair value should be for Google ahead of their earnings report. So hope you guys enjoyed this video. Find it helpful. If you do, make sure that you drop a like. Don't forget to subscribe to the channel. If you're just joining us for the first time, the link to our Discord and Patreon is going to be down below. If you're interested in joining us and of course getting access to all the buy and sell alerts, options alerts, trade ideas, everything's going to be included. Link's going to be down below. So first things first, this right here is going to be the upcoming quarter's earnings. Again, April 25th after the markets close is going to be Q1 2023. EPS estimate is going to be $1.07 per share. And we have seen 16 downward revisions for Google. 16 times it's been revised to the downside in the last 90 days. And revenue expectations are $68.8 billion. And this $1.07 EPS is going to be a decline of about 15% on a year-over-year basis if Google were to report these numbers. If it's going to be lower, of course, it's going to be a bigger decline. If it's going to be higher than $1.07, then it's going to be a little bit less of a decline. If they can report over $1.23, then it's going to be an increase on a year-over-year basis for Google. Now, Google, I don't have to go over into the details. We already know the company. I mean, fundamentals have been very strong, consistently growing revenues from $55 billion in 2013 to over $282 billion. Gross profit, very consistent, very significant numbers here. We're talking hundreds of billions of dollars. Incredibly profitable as well. Net income has ballooned to almost $60 billion and consistent share buyback from $13.5 billion down to $13.1 billion. And EBITDA has also been growing with foreign sales also growing in EBITDA, this right here, also consistently going higher and now up to over $90 billion. Profitability margins, very strong. Again, we're all familiar with Google's balance sheet, income statement, cash flows, very strong margins here. And they've got more cash than debt on the balance sheet. So we're sitting on, as of the most recent quarter, a little bit over $113 billion of total cash, only $30 billion of debt, which gives Google a negative net debt of $83 billion. So more cash than debt on the balance sheet. Very strong current ratio, very strong quick ratio, and debt to free cash flow at just over 2. So needless to say that Google is a phenomenal business. Now, in terms of earnings expectations, this right here is the expected growth from 2023, $5.07. The expected earnings growth is 11.2% on a year-over-year basis from analysts all the way up to $10.58 and consistently growing at 19%, 19%, 11, 13, and 16%. If you plug these numbers into my compounded annual calculator, that's going to be just a little bit under 16% growth for the next 5 years for Google. Now, a lot can happen in the next 5 years, and I want to touch base a little bit on AI as well. I was talking to one of our members earlier today, and we really just talked about how Google is definitely at a vulnerable spot, right? There's definitely a threat with Microsoft Bing AI. ChatGPT is just racked up over 1 billion monthly visits at the moment. And we've also heard from Samsung rumors, I don't know if it's confirmed reports, but on their devices, they're going to switch from Google being the default search engine to Bing. And that, of course, is going to create some more intense battles between Microsoft and Google. Now, I've already mentioned that I think these both companies have the opportunity to coexist at the same time in this industry, in this sector when it comes to search and advertising. Google, since it's already at the top of the mountain with respect to search, it's going to be much more difficult for them to hold on to their position, the dominant position that they have, because Microsoft is no small company, right? It's not a small company. It's not a company that Google can just throw money at and buy them, but it is a behemoth of its own. And that's why it's going to be a little bit of a problem for Google. Now, that being said, I still don't think that Google is completely off the table here. There's still risk there, yes, but Google's dominant position, the brand awareness, the security, the accuracy, the actual, it's been around for 20 years. The go-to search engine is still Google. And if they can actually enhance their Bard AI to a point where it becomes a little bit more mainstream, then yes, Google still has that dominant position. But I do still think that Microsoft is going to chip away a little bit of that revenue away from Google. So coexisting at the same time, there's going to be a threat from Microsoft, but Google is not going away. That's kind of like the takeaway that I have right now. And of course, if you get more information, if you get more news, more data from this battle between Microsoft and Google, then we'll be able to make better decisions. But as it stands, I still do believe that Google has what it takes to continue to perform well over the long term. So when it comes to our own analysis, again, this right here is the net income from 2022 with 13.1 billion shares, and EPS was 456. So getting up to over $5, that's going to be roughly around 11% growth. Now, in terms of growth rate, I'm not going to go with 16%. I'm going to go with a little bit lower 14% growth, just being a little bit more conservative here, because the next 5 years can be a little bit uncertain with Microsoft coming up with their own search engine and artificial intelligence taking, the pretty much the driver's seat here. The P multiple right now, if you notice, the valuation for Google is a little bit higher. It is trading at 20 times forward price to earnings multiple, 23 on a trailing basis. We've got enterprise value to EBITDA trading at just over 14 to 11 times, and price to sales is just over 4.5 to 4.86, and price to cash flow is pretty good at 13 to 14 times. So I can make a case that valuation-wise, Google is still a lot better compared to Microsoft. By the way, they're both reporting earnings on Tuesday after the bell. Both Microsoft and Google are going to be reporting their numbers on the same day. So for P multiple, I'm going to stick with 20. That's going to give us a PEG ratio of 1.43, 12% discount rate, 10% margin of safety, and minus 1% in share buyback, because they have consistently been buying back shares, and we come down to a fair value of just $94.24. Right now it's trading at just a little bit under $106 per share. So only an 11% downside, and it would be trading at my fair value. This right here is going to be that sensitivity grid where you can, again, go, do your own analysis, see if you are going with a higher or a lower P multiple, higher or lower growth rate, and where that fair value would end up for Google. But $94 seems to be very reasonable for Google, considering a $5 EPS. 94 divided by 5, we're looking at 18.8 times earnings multiple for Google on a forward basis. Now, this right here is going to be the complete technical analysis. We have for the longest time been trading inside this downtrending channel. So you can see that we have consistently been coming down here, making lower highs and lower lows in 2022. Then we started to consolidate sideways. So we were trading in that range where Google was, for the most part, trading sideways here. Support at $83, $84, and a resistance at $100. So getting rejected here, getting validated and supported here. And then more recently, what you'll notice, we're now starting to break to the upside. However, getting rejected at our next target and resistance at 109. So this right here is exactly where we got rejected in the past. So you'll notice that we got rejected here going back as far as February 2023. So we got rejected here. And right now we're once again finding ourselves in that resistance and struggling to break past that level over here. So going into earnings next week, this is the range. Support level very strong at $101, $100 per share, with a resistance staying put at $109 to $110 per share, exactly where we are getting rejected. And right now we're really just consolidating sideways on lower volume as well. So for Google, a lot of things are on the line. Artificial intelligence, search engine, advertising, their hardware product lines. And then of course we've got other bets, other significant segments that they are also part of, other potential ideas with respect to technology. That is really what's going to drive Google, and of course, not to mention Google Cloud Computing and how it's competing with Microsoft Azure and Amazon Web Services as well. So really, that's going to be on the line, but they are still expected to decline on a year-over-year basis at the moment at $0.07 per share. That's the expectation for EPS, with the revenue sitting at just a little bit over $68.8 billion. Support level going into earnings at $101, resistance at 109, and we're really just consolidating sideways with my fair value closer to $94 per share. So hope you guys enjoyed this quick update on Google prior to the earnings. Let me know your thoughts in the comment section down below. As always, make sure that you drop a like, subscribe to the channel if you're just joining us for the first time. The link to our Discord and Patreon is going to be down below. 16% annual discount available till the end of this month, so you can access all the buy and sell alerts, options alerts, trade ideas, all the member benefits, including all the private videos as well. As always, happy investing. I'll see you all in the next video.